Okay, so a couple new questions have come in here, and basically the question is, how do like where are we at with this news? What's the direction of the markets? We've got this big pop going on. Ash asks, what are you looking for now in terms of confirmation of direction, one way or the other? What's the time frame? And he also says, on the one hand, don't fight the Feds, but on the other, like you said, God forbid, but things may get worse based on the Spain case study. That's the one question. The other one was, if we get a fifth wave pullback, what then? How does it bounce? Now, I did a couple of days ago, 2-3 days ago, and not everybody may have heard this, so I'll reiterate it. 2 or 3 days ago, I said, okay, we're looking for a couple of things here on the way this is going to recover. I mean, there's 3 ways that this could recover. But let's talk about how we got here first. We get this 1, 2, big wave 3 down, 4 bounce. This is the question. This is the $60,000 question, $64,000 question. Bob Knight, come on down. This is the $64,000 question. Okay. We get this big news of economics. We get the coronavirus and the market collapses. We get news of economic stimulus from everybody around the world to ensure that the markets remain liquid, and we get this bounce. I'm a believer that in the Elliott wave theory, where markets move, especially in the longer term, where they move in five waves. So this is wave 1, 2, big, and wave 3 is usually the biggest 3. Now we're into 4. Now 5 can be a couple of things. It can be truncated and pull down and just match it, or it can be severe or it can break to a no low, and we see this trade down to 215. If things got really bad, down to 200 or 2,000. Now those are scenarios. The fifth wave, a truncated fifth, takes us to here, or breaks down, and we trade to new lows. What I said a few days ago, 2-3 days ago, was, if this market, and I think it was in here, if this market just trades sideways, then we would look for the fifth wave to hit new lows. Now, I'm not calling this the 4th bounce, but maybe it is. I don't think so. This is 1, 2, 3. This is still wave 3. What I said was, if this had traded sideways, we would watch this to roll over and trade to new lows. In the alternative, what I said was, if this, and we got this capitulation in a island reversal type pattern, and I said, on the other hand, if this thing pops up into this 2,600, 2,700 range, then most likely it rolls over and only double bottoms. It doesn't make new lows. Those are my 2 scenarios, I think. The third scenario is that this is a 1, 2, 3, 4, 5, and now we're making a V bottom right-hand extension. Either way, this right-hand extension needs to consolidate in here. I don't know. I just don't see this going straight up like this. Stocks have already moved 50%, 100%. They just can't sustain that kind of, because who's going to buy it in here? Everybody's waiting for it to pull back, or for the next shoe to drop, so that we can that they can, and they're not going to chase it up here. So the buying dries up. You can see already the volume is lower here. This day yesterday, it was almost like a spinning top, and there was big volume, but not the big volume like we got on the capitulation days here and here. So it shows to me that the volume is starting to dry up, and that this is going to roll over and pull back. Now, it might not, I don't know how far it's going to pull back. So the question is, what's the time frame and how much? In recent history, everything is accelerated. Now, this is, of course, this is unprecedented. This is a bear market that's never occurred before. I shouldn't say never. In our lifetime, it's never occurred before, because it's based on this pandemic. The other ones were basically economic, but this is social, not economic. It's economic in a sense because everybody's out of work and companies aren't selling anything. But it's the cause of it. It's the pandemic that's the cause of the economic distress. It's not the economic distress that's causing the markets to go down. It's the pandemic that's caused the markets to go down. And one of the results is economic distress. So in 2008, it bottomed in November. Then it popped and we got the same kind of pattern. Let's have a look and see if I can find that. 2008, here we are. We have this sell-off. We get this 1, 2, 3, 4, and then a big fifth wave down. And then pop and consolidation, or you could look at this as maybe as the 1, 2, this is all wave 3 down, 4 bounce, 5 last wave down, and then you got the V bottom right hand extension recovery. And so what happened was, and this bottomed here in November, you get this big capitulation, popped and then rolled over again and went lower. And bottomed in March of 2009. So that was a 4-month, December, January, February, and end of March, end of November to end of March. It was a 4-month time frame. The problem with this, trying to figure this one out, is that it's accelerated. Everything is accelerated now. So does this roll over? What's the time frame for this? I would say probably you're looking at 2 months before this bottoms out and we head up again. The governments are going to do everything they can to ensure that the markets continue to function properly. But we can't, but if nobody's working and the supply chain dries up and, stuff isn't being sold, it's going to start to come off again. And maybe economic news starts coming out and it's a bit dire. Because don't forget, we're going to start to be coming into earnings season, and there's going to be guidance, and companies might say, I don't know if they will or not, but they might say, we have no sales because of Corona, and our outlook for the next year is not that much better. If that's the case, then the market comes off. If they say this is just a temporary event, and as soon as Corona goes away, we're forecasting there's going to be a big rebound, then we may just see this truncate sideways, get the sell-off truncate sideways and go. But that's still a month away, so before we start getting that news. I think the market is going to pause in here, and it's going to want to know. Markets hate uncertainty, and we're now coming into a time of uncertainty. Is the light switch going to go on, or is the healthcare system going to get flooded and get overwhelmed, and we end up being like Italy and Spain, where where there's just not enough. Even if you had enough ventilators, you don't have enough people trained. You don't even have enough people to assemble them. You don't have enough people trained to run them. A lot of healthcare workers, they have children too. They can't, people can't show up for work. What are they going to do with their kids? They can't put them in the closet. Well, they can, but we used to do that. And then they passed some laws and we weren't allowed to do that anymore. You can't put them in the closet anymore and lock the door. You have to look after them. Kids these days, I don't get it. So there's going to be, to me, it's going to pull back. Can we get a V bottom recovery? We could. I just don't think that's realistic. So what I'm looking to do then is, as this pops up in here and maybe starts to trade sideways, is I'm going to start to look to maybe short stocks, weaker stocks. Now, not every stock is going to pull back. Some stocks in some sectors are going to remain strong and continue to rise. Maybe that's the AMDs and the NVIDIAs of the world, maybe Apple, I don't know. But anyway, so hopefully that answers your questions.